Good day, this is your European Open briefing for Wednesday, July 6th. My name is Michael Frentiades. I am the Chief Economist here at xm.com. Here are the key points you should be aware of today. Sterling plunged through 130 as Brexit worries intensify, about the impact of Brexit, that is. Safe havens such as the Japanese yen and gold catch a bid. Oil, however, is lower. And on the calendar, we had this morning German industrial orders, which disappointed. And later in the afternoon, US trade balance services ISM for June. We have a couple of Fed speakers, Dudley and Tarullo, and FOMC minutes later on. Starting with the pound, as we usually do these days, following the Brexit referendum to leave the EU. It has broken through the 130 level, pound dollar. It's difficult to pinpoint an exact reason for this, but news that 3 UK property funds have stopped redemptions seem to indicate some heavy capital outflows, some worries about the property market, and the attractiveness of Britain as a foreign investment destination. And Carney, on the other hand, seemed to welcome the drop in sterling, so there were no worries. I wouldn't say he encouraged further drops, but he said it moved in the direction that was necessary, so maybe we do have some more British pound weakness ahead of us. Now, in the United States, the New York Fed's Dudley sounded a little dovish as he indicated the Fed would take a wait-and-see approach on the Brexit after effects, and he also said that inflation and core inflation as it currently stands does not justify higher rates. So a little bit of confirming what the markets are anticipating, that no Fed hikes in the next few months. Maybe in December we will see, or next year. And we will see the Japanese yen. You might remember from yesterday that we said that the fact that the Japanese yen had broken below 102 was definitely a worrying development, and we saw quite negative trends developing yesterday. So the yen again catching a bit. It dropped through 101 in today's trading, but we see now a rebound around the 101 area. It will be interesting to watch whether the Bank of Japan wants to defend 100 in dollar yen in order to avoid further economic damage to exporters. Remember that dollar yen was north of 120 at the beginning of the year, so that is strong again, dealing a blow to Japanese exporters. Gold is rising. It made a fresh post-Brexit high at $1370 an ounce. This is the highest since March 2014, so a 2.25 year high, let's say. Oil, of course, was not as lucky as it dipped as low as 46.12, as we see the close relationship between gold and stocks. When stocks are falling, gold is also falling. German industrial orders missed estimates today. For May, they came in flat. There was a rise of 1% was expected. The Riksbank kept the rates unchanged at minus 0.5% as expected. And later, at the beginning of the US session, we expect US trade deficit at trade deficit of 40 billion compared to 37.4 billion the previous month. And the ISM non-manufacturing index expected at 53.3, a slight rise from 52.9 previous. We have a couple of Fed speakers later today. We said William Dudley again speaking, and Daniel Tarullo. We also have the Fed minutes from the Fed meeting, from the previous Fed meeting in June. However, given that There was at that time it was not yet known, of course, what June 23 referendum would, what decision it would yield. They might not be as useful. They will be useful in terms of the U.S. economic assessment. I also don't think that the U.S. economic assessment is going to change as rapidly, but we have seen the Fed that it is quite sensitive to market turmoil. So overall, I don't expect the Fed to sound at all hawkish. It's probably going to sound a little bit dovish because of the volatility. So I think this is going to be the main message from the Fed. Despite that, we see the dollar doing quite well. So Fed officials will not want to encourage further gains by the dollar by sounding hawkish, and they don't want to give the market something to worry about, especially in times of turmoil. So expect the Fed officials to sound relatively dovish. That's all from me today. Thank you very much for watching and have a great day.